into the day, there's absolutely no news. There's no data coming out. I want to check Forex Factory again to make sure I'm absolutely correct on that. But there is 8:30 a.m. We had Canadian wholesale. We do have at 11:30 a.m. Central Time, one of the FOMC board members is speaking, but that's past our prime hours. So what do we know we're most likely to get on the chart when that occurs? We're going to have a plus 500 and minus 500. Hold on 1 second here. Okay, hold on 1 second here. Someone needs the zones. Raj, if you are listening, I posted those on the private Twitter feed, but I will send these to you. Copy. We'll need. Okay, and then let me go ahead and get the file out. So that's all I wanted to point out. We're just at the very top of the range. Usually we gap up out of that range. We haven't done so today. Obviously, if we get above this on ES in particular, 1885, right, we can make a run for the highs. It's a low energy environment, which means it's going to be slow and grindy. So you should already be preparing in terms of where you're taking your trades. It's going to be slow. So we're going to want to focus on that 1 or 2 trades, right, with the best setups. And also know, when it's slow like this, I'm already readying myself to go, okay, I'm not going to get as many trade opportunities as I want, and they may not be as big as I want, right? And I'm also not going to get the long ball, meaning I'm probably not going to get big range extensions. I'm going to focus my scales on shorter ranges, meaning I'm probably going to take, even if I leave scales after my first 2 points on ES, I'm probably going to take 0.3 and 0.4 as well, because I know that we're going to have a tight range unless something happens with the FOMC member afternoon, or unless there's some outside news source that affects the market that starts driving us in one direction or the other. So let me copy real quick. Save. Cancel. And I will go ahead and post the post these out to everyone who needs the file. If I miss anyone, please remind me. These are coming right over, so let's start with there you go. Walt. There's Bill. Jackson. JD. Ron. Okay, I think I got everybody. Oh, no, I didn't. Okay, I think I got everyone who needs a TradeStation file. Hey, my pleasure, John. No problem. I'm going to try and do that every morning, at least get the initials out, and then if we need to make adjustments. So at any rate, I wanted to point out we're right at the top, near the top of that range. We've obviously had a tight overnight range. Usually what I would argue, if we're not gapping out of a range, is that we're going to get rejected at the top of that range. Also, I would expect initially, I would not expect it to roll over to the downside. Because we've been going up the last couple of days, I'm going to expect at least an attempt for a push back up towards Globex highs out of the gate. And also remember, we're really just simply flat. It's not a down opening necessarily. It's a flat opening. And so it's not bearish or bullish. And the only last piece about that, right, is that we need to watch the rotation sizes. Without the rotation, right, so remember, we have to balance 2 things. Our desire to make money, right, with the best environment to make money. If we look in the first 30 minutes like yesterday morning, right, and you see that there's simply 0 rotation to the downside, we have to consider whether, first of all, you have to consider 2 things. If you take your trade, you have to consider that you may not get any rotation in your favor. You have to watch the clock when it starts ticking, right? Because I know we had no rotation yesterday, I would like to see rotation now in less than 20 minutes instead of 25 minutes. The 25 minutes is a fail-safe for a normal market behavior. But now that I see the market slowing down, right, I know that after 20 minutes, I'm going to already want to start tightening up and or taking the trade out flat if it doesn't occur. Will this cause me to miss some trades? Yeah, but because there's going to be fewer opportunities through the course of the day, if the lack of rotation continues, what I don't want to do is get upside down early in the day, and then knowing that psychologically I want to be in a position where I get another trade where I can get out of being down for the day. My goal when the market gets hard, right, is to pick the one or two sweet spots that it offers, and then get the hell out of Dodge afterwards. So I'm not. Hold on one second. And then I want to get the sweet spots. I want to use the 1 minute tick divergence for trade location, right? And then I want to take my profits and get out. When will I know that I'm going to make money again? The range will explode. We'll go from these little tiny 5 and 10 point range days that we're having. All of a sudden we'll end up with a 20 point range. I'll usually, as a rule of thumb, I'll usually miss the first day. Sometimes I catch it, but I'll usually miss the first day. Why? Because I'm probably I'm waiting to see evidence that the range has expanded, and I may have missed the initial move, and it may be gone. But the next day through, once that move, whatever the new move is going to be, has started, I usually do a pretty good job at capturing those. So I don't overly worry about the first day. Let's go adjust these real quick here in the middle and get these zones ironed out here real quick. Okay, so we had Globex low at 1879, and I don't want to put a zone there because of Monday's high, but what I am going to, actually what we could do, okay, so let's get rid of this for now, because we have Globex high. So what we're going to do is we're going to change this color, yellow, 1884.50. Let's get rid of this, and we will bring this down to, I'm going to bring this one tick in front. Actually, we'll just bring it right in line with gap fill. So this is gap fill. And then we're going to get rid of the 1885 and a quarter. The 1884, the 2-point stop behind will contain that. And so let me see what we get rid of. Okay, so understand where we stopped. We could technically run, just keep a thin line back here and understand that the zone technically runs right back here to 1885 and 3/4. That makes it a really wide zone, but that's 3 points. Okay, my focus is going to be on the Globex high. They didn't push it. So just realize that if we get back here, what occurs in these areas, let me grab my drawing tools. Okay, so what could happen here is we come to Globex, we're going to come back to Globex high. We could easily just get a push back to this 1885 and 3/4, and then a rotation down. So how am I going to handle this as a zone? Okay, so what I probably want to do is this. Okay, so I want to make it as hard for them to get me as possible. So I'm going to leave the zone 1884, 1885 and 3/4. 1885 and 3/4, we get 18. I got to play with this for a second, guys. Give me just one sec here. Okay, so 1883 and 3/4 brings me too far back. Okay, so I'm going to say this is how I'm going to handle this, okay? The appropriate zone, the way that I do the zones every day, my checklist demands that I keep it, is I'm going to use Globex high as the back of the zone. However, I'm aware there's structure back to 1885 and 3/4, okay? So what I'm going to do is I'm going to target 1883.50 as the earliest that I want to enter this trade. Okay, what that risks, now realize, okay, so look at how I'm looking through this zone, okay? I'm going to target this area right here. Okay, I don't know how to control the colors on this thing. I wish I did. Let me see if I have an ability to do that. Oh, there we go. Okay, Okay, I'm going to target this 1883 and a quarter, 1883.50 area as my trade location. I'm aware that we can run back to 1885 and 3/4. Okay, if we could have pushed a little bit further back, this would have been ideal, obviously, in terms of lining up the zone. It didn't happen. The market obviously doesn't always cooperate with us. So first time to 1883.50, that's where I'm targeting it. The zone will stay the same, 1884.50 to 1882.50. In terms of traps, right, you've got to be aware of two areas in here, okay, and that'll be these. So the key area is yesterday's high, which is going to be 1883. Okay, I'm targeting a slight break so that we can, because what I'm hoping is that we make a break of the high and a push for Globex high, right? So 1883.50, and then I'm aware that I need my stop to be behind 1885 and 3/4, right? So from 1883.50, I really need a 3-point stop from 1883.50, and I don't have a better way of adjusting that. And normally, realize this is part of the lack of energy that the market's having right now, is we're just not getting pushes even in the overnight into key areas. And so that's why we're ending up with kind of having to adjust zones in the middle of really kind of crap, quite frankly. Okay, so the only way I'll take it before this point is if we come into this after 9 a.m. and I have 1 minute tick divergence at the front of the zone. Okay, and even with that, you need to leave a little bit of extra room behind this 1885 and 3/4, right? Even if it's 1886 and a quarter, you want it just enough to get to the back of this area and still get rejection. They could reject it right to the T there. The other thing is to be aware of, right? Where are the traps going to occur in this area? Okay, so we can get above this 1883. Let's say we don't make it to the 1884.50, right? We get to 1883. We can get a trap right underneath 1883, and then that would give you a swing high to put your stop behind, right? In terms of a move to the downside. And that could be either an A grade or B grade trap. So we don't necessarily need it to push all the way up to still get a trade set up. And I will do my best to outline that over the Twitter feed if we get set up there. Okay. On the downside, so the zone is, just to be clear, it's going to be 1882.50 to 1884.50. And the trap locations are both at yesterday's high, which is 1883, and 1884.50. Those are the two places where an A grade or B grade trap can set up. Okay, and hold on a second. Here, let's get rid of this. Okay, so on the downside, why do I have this 1879 here? Globex low. Okay, it looks like we're still pushing on Globex low, and hopefully we'll push a little bit lower. This is the very bottom of structure here. As everyone probably knows, I hate to be in the middle of where the prior day's balance was. I think it's a terrible place to put on trade location, right? Obviously, that's where they found the low again, part of that low energy. So where I'm targeting is, I will use this as a drawing tool. Sorry, guys. Okay, I'm only going to use this as a trap location. I will not be taking a long first move into this 1879, okay, like I normally would in here where I'm automatically going to take it. Again, unless I have tick divergence at this location, technically there's a zone here if you want to put up, I don't like putting up 1-point zones, but if you want to put the zone in here, it's technically 1878 to 1879. Again, I don't like the location at all. It might stick due to the low energy environment, but I don't like it. I want to stretch. So the first place I'm looking to take along is into this 1876 to 1874 area. Okay, and then what I want you to notice is underneath here, if we get really beneath this point right here, this 1875, it's very poorly auctioned, okay? So the way that it works is I would actually expect responsive buyers in the first half of this zone, somewhere from the top to the middle is where I'll be concentrating my efforts. There's no easy way to clean this, but if we don't get a response out of this area and we start sitting in the back of the zone, and we exceed 15 minutes in the white zone, I'm probably taking the trade out, because all of this from here all the way down to here is poorly auctioned. Okay, also be aware, same thing here. This area is poorly auctioned, so this zone gets 15 minutes to give me 2 points. Okay, if it doesn't, I'm bringing stops up pretty quickly. This gets 15 minutes to give me 2 points, because all of this yesterday when we moved up was terribly auctioned. There's almost no volume. There's absolutely almost no volume all the way through here. The worst of which was right in this area right here. Okay, what normally happens when we trade is we come into an area that's poorly auctioned, and we will find responsive buyers and they'll push back up. Okay, this just has to happen relatively quickly for me. Am I a little more defensive in a thin market? Yes. What most people want to do is be more patient with the trades because the market's moving slower, and I'm the opposite. I'd rather miss the trade entirely, okay, than have to wait 30 minutes to get my 2 points. Why? Because when you're leveraged, time is not your friend, okay, at all. And so that leaves you open to getting swept, to having stops. The concern is when you start building in a zone like this, right? So let's say we sit here for 20 minutes. Well, what's happening right back here? Okay, everyone and their brother is putting stops right here, 1 point behind the zone or 1 point behind the consolidation, right? And what are the algos doing? It's a slow market. The algos are reading those stops, and as soon as those stops get to a critical mass relative to the amount of volume. So I'm not an algo writer, right? But I've spoken to several guys who trade algos, right? And what they're doing is they're looking for a ratio of the amount of volume per minute relative to the number of stops that are sitting at a relative location, right? And what they're trying to figure out is if they can jam enough volume through to trigger those stops, right, and flip. And so what you end up doing is getting one of these where it comes in, it sweeps, and then it moves back up. Great example of that would have been yesterday on NQ, actually, and I can show you where that took place on NQ because I watched it and I even called it out. I saw that coming on the private Twitter feed. I don't know if y'all saw that, but I'll show you exactly where that occurred. Okay. Okay. Right here. Okay. Everyone had built their Okay, so we had sat here. Look at how long we sat here for. This is from approximately 10:15 to 11:15 for an hour. Okay, people saw that we went flatlined and sideways. People started shorting. Okay, where are you going to put the stops? Right behind here, right? What did they do? They came, they took the stops in a burst, right? Swept all the stops and brought it right back down. Classic algo trading pattern. Okay, you notice in all this, right? They were unable really to do that. We didn't consolidate anywhere. You can tell this wasn't a sweep. Why? They came up, they may have taken out a couple of stops, but it continued going up. This was pure algo sweep right there. Take out all the stops, bring it right back down, and then they consolidated it for another hour here, right? And again, you can see they did that again. Where did all the stops build? Right behind here, right? And this is also classic action that aligns itself with balanced market, right? Balanced market breaks out to new highs, right? Plus 500, minus 500 on the tick. Breakout, everyone thinks it's going. They're sweeping the stops. They bring it right back into the range. We consolidate, right? Break out to new highs, even at the end of the day, right? Break out to new highs, boom, bring it right back down into the range. This may not seem like very much, but if you're an NQ trader, right, this is 36.17, right? Back down to 36.11. That's $6 or 120 bucks a contract, right? That's two very nice trades through the course of the day if you can identify these locations. Okay, I think I probably covered more than I needed to on that, so let's get rid of the chart. Okay, so again, white zone, 15 minutes. This 1871, 15 minutes, right? I will look to take, I can tell you without question, regardless of what's going on, I will take a long first time into this location right here. Okay, and I will take a long first time into this 1859. Oh, I have that zone screwed up. Hold on one second. 1859 to 1860. Here, let me fix that really quick. Okay, and then if we get down here to 1856, I highly doubt that we get down. Let's look at one more thing from the last couple of days while we're getting prepped for the morning, right, is I want to look at the behavior, and this is something, again, I didn't cover in detail when I was doing them prior to going to subscription, but I look at it for myself. I wasn't going over it with you guys prior to the open. Okay. Let's just make this a 2-minute chart to consolidate a little bit. Okay, yesterday morning on ES, what was the size of the rotation up? We came in the first 15 minutes, we essentially had an open drive higher, 1869, let's call it, to 1878, right? Over the first, let's call that 69, 78, 9-point rotation in the first half hour, right? Prior day. And we had responsive buyers after the first push down. Prior day, rotation down. We opened, we pushed down from let's call it 1870, right? The first rotation down was to 1864. Let's just call that 6.5 points, right? With an eventual extension of down to 1861. That's again 9 points, okay? I did say it was 9 points here as well, right? 9 points. Following day, we opened, we drove lower on the gap down, right? 1880, and we had a rotation all the way down to, before we found a responsive buy, 1870. So what's the theme that's showing up repeatedly on this rotation is approximately 9 points of extension is where we're getting our first signs of any exhaustion for the last 3 days in either direction, right? Let's see what we had the prior day, if it was just crap, what we had here. Let's see. 1893, push down to eventual, got much smaller here. I'm trying to see if there's a pattern in the opening gate, out of the open. Open, 1893, 1898, 5 points. We've almost doubled the range of the initial drive the last couple of days. Let's see, 1882, 6 points. So somewhere between 6 and 9 is going to be our ideal rotation in the morning before we get a counter rotation. If it's smaller than that, right, I'll miss it. But I want to see what the initial drives are, up or down, before I get good location to take a counter, right? On NQ, how's the response been in the AM, right? Has it been a leader or has it been weaker? Let's take a look. Okay, responsive buys back up. We open, push down, open, push down, open, gap down, push up, open, push up, open, push up, open, push up, open, push up. Okay, so there's no clear pattern other than the NQ has been responsive from the initial pushes lower, right, particularly yesterday. And remember, NQ was leading yesterday and today to the upside, right? So we want to see that continue as well. Obviously, we're opening down about 2 points. I want to see if once we open, whether we get the responsive buy. There's nothing telling. The problem is we're not having enough of a gap to make a big impact. I would suspect, given the strength in NQ and closing near the high, that if we open, we're going to make an initial push back up. We know if we don't get back and close that gap, it's only 2 points, right, that we have exceptional weakness. So there's no telling here. I was hoping there was going to be a tell in there. There's not a tell that I can read out of the gate. What I'm hoping is that NQ will start taking the leadership role, right? The problem is we're at the very top of the range and we're not breaking out, right? If we look at the volume profiles really quick. And by the way, I've covered on ESD for those guys that want to drop off. On the upside, I haven't covered the short side. Let me do that really quick. I apologize. I'm having a little ADD moment here. Let's fix this real quick. Okay, on the upside, and I haven't given the upper end of the zones. Okay, year-to-date high. So notice between this 1892 and 1898, I don't have a lot. Okay, you need to put a zone right at 1895. It's a single point. I'll add it here. You can see obviously where we consolidated there, but it's just a single point. Remember, how do I treat the single points? As if there was a 2-point zone here, 1893 to 1895. Obviously, that would stack this right on top of each other. Okay. The other thing to remember when we're going through this is virgin territory here in terms of being untested. Remember how the market works when it tests. So if you look at yesterday, okay, it doesn't have to go this way each and every time, but pen. Okay, and I'm not trying to make this confusing. I want to make it clear for everyone, okay? This is the structure right here, okay? Yesterday, we came to the bottom of structure, right over here, and rejected. See that? And we weren't able to test. So this bottom has been tested. Now we have an open gap here on the top. It has not been tested yet. Usually, not always, you will find rejection when we test the backside the first time, right? If we do not test, if we break straight through it like this, usually you will get a backside test of this and then a continuation higher. That's the normal pattern that it follows. So I want to be clear. First time it usually gets rejection. If it fails to get rejection, it's a sign of strength. It'll usually break through, backside test, and then continue to wherever the next structure is. This is breakdown, retest of the initial move that started this larger downside move, right? Right here at 1890. I will take a short first time into 1890, probably at the front of the zone, okay? Almost with no questions asked, and I'm willing to lose 4 points here. 1895, I need 1 minute tick divergence here. Okay, it'll probably look a lot like it did yesterday, right, where we hit that one price point and we got rejection out of it. I believe it was, I want to say it was 1883. I'll go back and look at it, but I had a single point of rejection. It came in and it provided a 2 to 3 point rotation lower. Before we finally climbed higher towards the end of the day, right? Year-to-date high. Okay, this is a coin flip. 1900 is right behind it, right? And you'll notice that I don't have a zone. 1900 is a psychological number for resistance, but there is literally, once we get above 1895, there's really nothing up here to stop us from going higher. I need 1 minute tick divergence to justify it here, and even then, it is a tricky place to trade at all-time highs, right? You don't know if they're going to get squeezed. What I would prefer to see in this area, okay, let me be very specific if we get up there. What I'd prefer to see is actually us come up, trade above, right, and then close back down below and create a trap for a move back to the downside. That's how I'd prefer to play this location rather than trying to step in and trying to figure out whether they're going to break the year-to-date high or not. Let someone else screw with it. Everyone and their brother will be anxious at this area. The market should be jumpy if we get here. It shouldn't be a smooth transition. So let them go ahead and squeeze the people who are going to get squeezed and see if they bring it back underneath. The easier trade is if they bring it back underneath and trap guys up here for a move back into the range. Okay. So remember, usually when we break out on gaps. We're not having that. I don't anticipate getting up there today. But, oh, there's one other key point, okay, that I want to bring out of this. Almost forgot. Okay, so if you recall yesterday, God bless, I'm going to have to take me forever to get used to this new tool. Okay, remember I was pointing out this 1878 to 1882 area, that it's critical, right? If we look at it from this perspective, what have we done? Okay, all these closes and opens were all below this 1878.50 level. You can see that, right? We've now closed back above, so we've kind of closed in a tweener. We're above where all these close took place, but we really haven't broken back out to where we established this island reversal. Okay, we need to get above and hold above 1882.50. We made an attempt, right? We're right here is our Globex high, right? We really need to get up into this range to make an assault at the highs. But we're not bearish unless we get below and hold below 1878.50, right? Now, if we come below here, we get back up and we're unable to get below, then it's the other side of the range. Okay, so it's a slow market. I think the onus is on the bears to get us below and hold below 1878.50. Otherwise, because it's a thin market, it's somewhat lethargic. who gets more nervous? Okay, so just look at the chart. We're in a bull market. Okay, we're near all-time highs. Okay, and people who are cash short on the side, and people who are cash short on the side, and people who are actually short. Those are the two groups that are going to be the most nervous. The longs, once again, particularly anyone who has beyond a swing time frame, right, and are actually investors, it's going to take damage to get those guys nervous and to get big pushes to the downside. Unless we hear something from the Fed, we're going to have something to motivate us to get really bearish beyond anything besides profit taking. Okay, so my picture is that I don't want to be overly eager. The reason I say this is in my own mentality. I don't want to get overly eager to think we're going to roll over, we're going to crash to the downside. The fact of the matter is we're just a little bit off the highs. Okay, the bears need to get below 1878.50 to have any kind of effect to the bottom end of this range. Okay, and that it would be normal to go from the top end of the range to the bottom end of the range. They usually close the bottom end of the range fairly strongly. Okay, meaning they sell the top end of the range and the bottom end of the range fairly strongly, meaning it looks like it's going straight up at the top and it looks like it's going straight down at the bottom. So what do I want to look for? I want to look for tick divergences. I want to look for an expansion of the range to the downside or to the upside. We haven't had that. We've had a contraction of the range, right? And then I want to make sure that when I'm taking my trades that I'm actually getting rotations, right? If I'm seeing less than a 2-point rotation and I know my target is 2 points, that means I have to have perfection. What do I not want to do? The only place traders get into trouble in this particular scenario is when they force their hand and they demand a profit and they demand to get a profit out of a range that is not rotating fully. I hope that makes sense, right? So we'll use tick divergence to help us. We'll use trade location. I left plenty of room in between the zones, and I'm prepared to get bored today, right? Unless I see a quick expansion of the range, but I know that I have no news. I also know that I pretty much want to get this wrapped up in the first hour to hour and a half because it's going to get dreadfully slow after London close. Okay, so those are the caveats that I have. On the zones above, I think I made this pretty clear in terms of where we are in the range. We need to hold this 1878.50 out of the gate, right, and then get above this 1882.50, which was yesterday's close, and really make a drive higher if we're going to make an assault on these highs. The bears are the ones that had the pressure on them this morning. If they can't get it below 1878.50, they're probably going to be squeezed again like they got squeezed yesterday. Okay, but I don't expect a huge range either way. Let's erase this really quick. And then let's look at the 24-hour chart. I got to get rid of this tool. So let's get rid of this. I don't need this chart. And let's look at, okay, I have too many of these charts. Let's just go to ES. Okay, 24 hours, you can see, look how poorly this is all auctioned through here, right? Notice that all of this, there's no definitive high volume nodes, right? We just have little way stations along the way. It's just a sign of a poorly auctioned market, right? This was the area that was best auctioned yesterday, and we're auctioning over it right now. Obviously, again, that would argue for the need to stay above where this low volume node, which brings us right to 1878.50. This is off of a 24-hour chart, right? On the upside, you can see this 1890 off of a 24-hour, right, is the last place where we had good volume. That's, again, that corresponds with where, I wish there was a way to keep that tool simply out. Okay. That corresponds with the initial resistance to 1890, 1892, right? It's also a 10-point, the 1892 also gives us a 10-point rotation up to the backside. Again, if I can get a move into this location this morning, I will take a short first time into this area, okay? Again, it needs to get out relatively quickly if it's slow, and I'd like to see some rotations there, but that's the location that I'm looking for. Let's flip back here real quick. And then if we look on the downside, right, below this, there's this little area right here is this 1865, I'm going blind, is our last little lip where we would look for rejection below here. It really gets pretty slippery down to about 1862, and then below that right here at about 1859, okay? Below that, 1855. The very bottom of these tips are all poorly auctioned and usually would like to be re-auctioned. I still say this 1840 right down here, there's an open gap sitting right here at 1839, is begging to get retested. Obviously, I don't think we're going to get anywhere close to that today. The market would be down ginormous and there's no news unless the Fed speaker says something ridiculous. Okay, so I think I covered all the bases, guys. Remember, in our trading, I can't emphasize this enough, okay? We've gone through slow periods before, meaning those who y'all been with me for a while, right? Back in January, we had a period of 5 or 6 days where the market almost didn't move at all. The guys who got frustrated in that period and forced their trades in that period dug holes and needed the very nice trading period that came afterwards to put P&L on the board, okay? The guys who pretty much were just either scraping through, had zero trades, or just were taking their small 2 points or bringing their stops up relatively quickly because it was choppy, right? When the market range expanded, they got paid huge, okay? So my goal is always the same in these scenarios. I just want to wait till the market makes it the easiest on me, okay? I'll know that through 1 minute tick divergence. I'll know that through good rotation size, right? And I'll be able to see within the market, right, a good, 3 to 6 point rotation movements up and down, not 1.5, not zero rotation. I won't look at the chart like I did yesterday and see that we've moved 5 ticks in 20 minutes, okay? That's not a fantastic trading environment. So keep that in mind. I'll call it as I see it. It's 8:28. Anyone have any quick questions? I'll be happy to answer them, and then I'm going to roll out and get ready for my day. And I'll put it on the private Twitter feed as I see the trades. I'll put fewer trades now on the public Twitter feed and more on the private Twitter feed as I see them set up. Okay. Well, I hope this was helpful. I hope everyone has a wonderful day, and I'll call them as I see them. I'll talk to you later, guys.